Okay. So have you ever gotten that, like, I don't know, that feeling that there's these like big things happening in the background,
Mm.
you know, behind the scenes that could really like mess with your money?
Mm.
Today, we are going to be going on a deep dive
All right.
into the world of secret financial strategies.
Okay.
Specifically, we're going to be looking at how some global leaders, at least according to this article, are thinking about changing the US dollar.
Interesting.
We've got a really interesting article here. It's called Impact des stratégies financières secrètes sur le dollar,
Wow.
which translates to Impact of Secret Financial Strategies on the Dollar.
Oh, neat.
And this article claims that there are some pretty high-level discussions going on right now that could really change the game for literally everyone,
Oh, wow.
even those who don't follow markets and finance.
That sounds pretty big.
Yeah, and this isn't just, like a little tweak here and there, like to
Yeah.
interest rates or, just some minor policy changes.
Yeah.
This article suggests that there's a much bolder plan in the works
Oh, wow.
to like completely overhaul how U.S. debt is structured,
Hmm.
which could honestly have like ripple effects throughout the entire global financial system.
Yeah, once you start messing with the dollar, you start messing with like everything else.
Exactly.
Yeah.
So this article actually claims that figures like, former President Trump
Oh, wow.
and other global leaders are all involved in these secret meetings.
Yeah.
And they're discussing a plan to completely swap out existing U.S. Treasury bonds
Okay.
for something called, and get this, 100-year zero-coupon bonds.
100 years.
100 years?
That is a very long time.
I know, right? I'm no finance whiz, I'll tell you that right now.
Ah.
But even I know that 100 years is a long time.
Right.
What exactly are these zero-coupon bonds?
Okay, so basically you can think of a regular bond, like an IOU from the government,
Hmm.
that pays you interest regularly.
Like a check in the mail.
Basically, yeah.
Okay.
A zero coupon bond is a little different. So you buy it at a discounted price, and then you receive the full face value when it matures, but you don't get any interest payments along the way.
Okay, so you just wait
You just wait.
until it matures.
Exactly.
And then you get paid.
You get paid the full amount, yeah.
Oh, wow.
So imagine holding on to a bond for a whole century
Oh, my goodness.
before getting your full return.
That's wild.
It is wild, yeah.
Wow. Okay, so the potential upside for the U.S. here, I guess, is that it could significantly reduce its interest payments on its debt
Right, because they don't have to pay it along the way. They only have to pay it all at the very, very end.
at the very end.
Yeah.
So, less money going out to interest payments that, at least on the surface level, sounds good, right?
It does on the surface.
But what about all the people who are currently holding those trillions and trillions of dollars
Yeah.
in U.S. Treasury bonds?
Right.
Wouldn't they be missing out on a lot of interest income?
A lot. And I mean, foreign governments alone hold over $8.6 trillion in U.S. Treasury bonds,
Wow.
generating about $394 billion in interest annually.
Gosh.
Yeah. So forcing an exchange of these bonds would create, some definite winners
Sure.
and some definite losers. And that's where things get a little shaky, I think.
Yeah, and when I first heard about this potential bond swap, it reminded me of something I actually read about in a history class way back when.
Mm-hmm.
The Plaza Accord of 1985.
Oh, yeah.
And this is way back then.
Yeah.
But world leaders all got together, and they agreed to deliberately weaken the dollar
Right.
to address U.S. trade deficits.
Interesting.
So could this bond swap that we're talking about now
Right.
be like a modern-day Plaza Accord where the aims are kind of similar,
Right.
but the outcomes could be totally different?
Yeah, because back then, I mean, the world was a different place.
Sure.
Things were less globalized, I think.
For sure.
So, yeah.
And, I mean, the Plaza Accord, I guess it did have some successes,
Yeah.
but it also led to some, unintended consequences.
Exactly. It led to inflation,
Right.
which no one really wants.
Right. Nobody wants that. And so if history repeats itself,
Yeah.
we could see, similar issues popping up with this bond swap.
Definitely.
And the article even highlights some other potential downsides
Hmm.
of a weakened dollar.
Okay.
One that really stood out to me was this idea of de-dollarization.
Yeah, that's a big one.
So what does that mean?
Yeah.
Like, why should we even care about that?
Okay, so de-dollarization basically means a shift away from the US dollar as like the main currency that everyone uses. So imagine instead of using dollars,
Right.
countries started using gold or, a bunch of different currencies together to trade things like oil.
Oh, wow.
That's what de-dollarization could actually look like. And we're already starting to see some central banks around the world, they're already buying gold to hedge against dollar decline.
So they're already preparing.
They are, yeah, they're getting ready, which, that could be a sign of things to come.
So if the dollar does weaken, what happens to, like, the rest of us?
Yeah.
Could this actually, like, impact our everyday lives?
Yeah. So a weaker dollar basically means that your money doesn't go as far.
Okay.
It's a decrease in purchasing power, so things just get more expensive.
Mm-hmm.
This can lead to stagflation,
Oh, yeah.
which is high inflation but also slow economic growth.
That sounds awful.
It's not great. So imagine going to the grocery store and seeing the price of everything going way up,
Yeah.
but your paycheck is staying the same. And it's hard to find a job. That's the reality of stagflation. A falling dollar could also force the Federal Reserve to raise interest rates to try to get things under control,
Right.
which could also hurt the economy even more.
So it seems like this potential financial storm is brewing.
Yeah, it does.
And, it sounds like we could all get caught in the rain here. However, this article does mention one way to potentially protect yourself.
Oh, good.
Investing in something called the Invesco U.S. Dollar Bearish Fund,
Okay,
or UDN for short.
got it.
So what can you tell us about that?
So UDN is an exchange-traded fund, or an ETF,
Okay.
that's designed to make money when the dollar goes down.
Oh, okay.
So it's essentially a way to bet against the dollar. Like any investment, it has risks,
Sure.
but it could be a way to kind of, protect yourself if
Yeah.
the dollar does start to drop.
Interesting. And for those who are, maybe a bit more comfortable with risk,
Yeah,
the article also briefly mentions options trading on UDN, right?
it does. And so options, they can give you more leverage,
Okay.
which means you can make more money potentially, but you could also lose a lot more.
Ah, okay. So it's higher risk, higher reward.
Yeah, exactly. It's like using a megaphone for your investment.
Okay.
It makes everything bigger, the gains and the losses.
Got it. So it seems like there's a lot going on behind the scenes in the world of finance
They're always,
that could have a very real impact on all of us.
yeah,
We've got secret meetings, potential dollar devaluation strategies,
right.
and the risk of some, pretty serious economic consequences.
It really makes you wonder, like, what happens if the dollar does lose its spot as, the top dog?
Yeah.
Like, what happens next? What other assets could people turn to? Like, would it be gold?
Right.
Other
Or
currencies?
real estate.
Who knows?
Yeah, those are some really, really good questions to think about.
Yeah.
And we encourage all of you to do just that. Stay informed, keep an eye on what's happening.
Right.
We'll definitely be keeping you updated on this.
Good to know.
A lot of other fascinating topics
Yes,
in future deep dives.
for sure. Looking forward to it.
All right.